And hello, everyone. Welcome, one and all, to the Apptrepreneur Show. I am your host, Kevin the Apptrepreneur, and it is an honor and a privilege to have you here for your Monday, Wednesday, and Friday installments of apps, tech, and even a little bit of entertainment. And you know, today is an episode that a lot of longtime viewers are probably going to especially appreciate, because today it's almost, not 100%, but almost a full gig economy episode. Like, we've got about 6 stories, 7 if I want to push it, and of those, 5 are related to the gig economy. So this is actually the episode that a lot of people have been asking for, and it just happened to be that we had enough discussions here. And if we don't do some of these stories, some of them might be done Monday. I already had to remove one story for, well, I'm not going to be doing an episode Monday, actually, but maybe next Wednesday. Monday, something's going on. So anyway, I see we have Kelsey here, we have RBX and Mark here. Thank you so much. And for all of those who are watching, feel free to comment and ask any questions during the live stream. We, between the topics, do respond to these comments. Also, I should mention that if you're watching and there's a particular topic that you like, and then the next topic, you know, let's say you like watching the gig news, and the next topic is about, say, the Apple Store, don't go away, because your gig topics might come back. We kind of like to blend them all together, if you know what I mean. So anyway, I set my wife up with Donkey Kong Country 2 on the Wii U in the living room, so she should be entertained for a good hour or so. So let's start the episode and talk about the main topic. And the main topic involves, well, yesterday Uber had their little earnings call. You know, I don't know, for those of you who aren't aware, the earnings call is something that companies do when they are publicly traded. They get on the phone with investors and they say how much money they made on some things and how much money they lost on other things, and they detail plans on how they're going to continue to grow or get out of the mess. I will say this: Uber had a much better call than AMC Theaters. AMC Theaters lost like 99% of their revenue. And as an investor of AMC, that of course makes me very nervous. But a few things did pop up in Uber's earnings call that was interesting. The first thing is that technically Uber is no longer a rideshare company. Now, what does that mean exactly? Because obviously they're still doing rideshare. Here's what it means. Uber now delivers more food than they give ride shares. And we knew this was probably going to happen, you know, pandemic and everything. People are staying home. They're, you know, buying more food to be delivered. This is why Uber really wanted to buy Grubhub. Instead, they settled for Postmates. But Uber's business is now primarily fueled by the Uber Eats service that they do. But here's the thing that's probably got to infuriate investors, and this is why the stock didn't really raise that much yesterday. It didn't dip too much either, to be perfectly fair, but they didn't raise, and that's because Uber still lost almost $2 billion despite this change, and despite the fact that Uber Eats is, in theory, more profitable than just plain Uber. So let's look at this article by Wired, and we'll skip this, but Wired writes, when it announced its second quarter earnings on Thursday, it became clear that the ride-hail company isn't quite a ride-hail company anymore. Uber's a delivery service now, and one that's still losing plenty of dough. Amid a pandemic that's kept workplaces, restaurants, and bars closed and potential riders housebound, the company's classic rides business cratered, with total bookings dropping by 75% year over year, but eaters the world over turned the food and food delivery while stuck inside. For the first time, the company's delivery segment generated more in bookings than its rides segment. More than double, in fact. Eats booking grew 112% year over year. CEO Dara Khosrowshahi noted on a call with investors Thursday that delivery is now the size of Uber's ride business when he joined the company in 2017. He's quoted saying, "We've essentially built a second Uber in under 3 years." Well, I mean, in all fairness, you were kind of forced to. I mean, that's the market doing what it does. I mean, people don't need rides that much these days, but they still need food, and hence that is why Uber Eats is there. But I mean, Uber didn't necessarily build that audience because they're just so much better. People are just stuck in the house. Anyway, in all, the company posted a $1.8 billion loss between the beginning of April and the end of June. Uber stock fell 2.5% in after-hour trading, so it really didn't drop that much, leaving its shares 25% below their May 2019 IPO price.